Hello guys and welcome back to the Cedi Investor. In today's episode, I want to talk about one big issue that a lot of investors face, especially new investors, and that is making investment decisions based on stock price rather than the fundamentals or the performances of a company. Before we continue, please make sure to subscribe to the channel, make sure to like the video and share to people you think might be interested as well. I really appreciate it. Now let's get into it. I think I started noticing this when I was talking with a friend. He's a new investor. Let's just say he's a new investor. And I realized he was more excited when it came to stocks with cheap prices rather than stocks with expensive price. What do I mean here? Let's go onto the chart here. So let's say a company like Bank trading at 0.79, he was more willing to invest in such a company rather than, let's say, Access Bank trading at a share price of 16.34, or even GCB trading at a share price of 15.53, or the alternative of EcoBank Ghana trading at a share price of 14. Even if you look at maybe there's something like the insurance sector, looking at SIC here, SIC trading at 1.06, he was more willing to invest in such a company rather than a company like, Enterprise Group Limited trading at 3.36. Another example, I don't know if there's another example I could give. Looking at even a company like Total, let me use Total Energies trading at 40.6. He wasn't really willing to invest in such a company compared to a company like, let me say, Ghana Oil trading at 2.45. Can you see the trend of what I'm trying to say? He was more willing to invest in companies with cheap prices than the ones with the so-called expensive price or higher price. Now, from the example I just gave, I'm not assuming that any stock is better than the other. You have to do your own research to determine that. But then what we as investors need to do is to actually analyze the company to determine that the stock price the company is trading at, based on that valuations of the company, does the fundamentals, or rather the performance of the company, does it match up to the stock price? What do I mean? Let me break it down. We all know how transportation in Ghana is very, very bad. The choo system, Charlie, I think I should make a whole video on that, because the choo system there is really becoming very bad. So let's say you want to buy a car, because right now, like I'm saying, the choo system, the transportation system in Ghana is just not worth it. So you decide to buy a car. You have your money set aside and you are going through some options to see which one will be the best car for you. Now, the first car you have here is a 2024 GT Cooper. Now look at the car. What a beautiful car. Charlie, look at this beauty. Look at this beautiful car. Charlie, see this thing. Nice car. This is the first car you have. You go to the dealership, you ask for price, they say $1 million US. Okay, so you say, okay, then you let me just go around and see another thing, right? The second option, you are going around, then you see this one, Picanto 2010. Say what color? Say yellow, say green, say whatever. Now there's the car, an okay car, beautiful car. Okay, it will do the job of taking you from point A to B, which is the main purpose of the car. So you ask for this price to they say 10,000, or let's say 50,000 Ghana cedis. So in your head you are like, oh, so this car is 50,000 Ghana cedis, but this car, the 4GT, is 1 million Ghana cedis. Now, does that mean that the Picanto is a cheaper car compared to that of the 4GT? Yes, in terms of price, like the actual amount you are paying, the Picanto is cheaper than the 4GT. Now, why would someone pay 1 million Ghana cedis for the 4GT compared to 50,000 Ghana cedis for a Picanto. After all, they are all cars. So what makes one 1 million? What makes another one 50,000 Ghana cedis? So then now we forgo, you as a reasonable human being will forgo the price of the thing, and you look at the value the thing is providing. So one is, let's say, branding, or the brand behind it. Ford is a bigger brand compared to the Picanto, so there's some value being added towards that. Two, how fast the car moves. Picanto, I don't usually say it go fast like that. This one very fast. Three, the width of the car. I'm assuming these luxurious cars are able to retain its value compared to that of a Picanto, where when you buy the car, most likely depreciation will hit them sharp like that. So I don't want to make this whole video long, but my main point is that the value behind the 4GT, like there are reasons behind it. Some probably not important, some are important, but there's something backing it to make it 1 million compared to the Picanto, which is 50,000 Ghana cedis. After all, they are all cars. Bringing that analogy back into the stock market, let's use EcoBank as an example right here. EcoBank at the beginning of the year was trading at 6.5. It's now trading at 14 Ghana cedis. And a lot of new investors will look at this and say, Charlie, think I really at the beginning of the year, like this one to have been very, very, very good. And maybe they start getting annoyed, or maybe start getting left out, feeling sad that they've missed such a huge move. The company is up 115% since the start of the year. Now, I'm not going to do any analysis on the company to see if it is worth 14 or not. That's not what I'm coming to do here. But I'm saying, if the company goes to 14 Ghana cedis, companies are legal entities. So meaning, just like any other human beings, companies can evolve, they can grow, they can decline. When you're a new graduate coming out of school, your first job, you are being paid, let's say, 2,000 Ghana cedis. That's because you have little to no experience. But as you continue to mature, you continue to learn, build your experiences, add more skills, what do? You ask for what? A raise, or you leave the work to a new workplace for better pay that matches your new skills and experiences. Now, the same applies to companies. The company at the beginning of the year was trading at 6.5. Assuming the company is growing, the revenue is going up, the net profit is going up, paying more dividends, better free cash flow, less debt, all these metrics that are good or beneficiary to shareholders, why should the company be worth 6.5 next year if all of these metrics are growing? Do you get my point? So let's assume this case for EcoBank is growing its revenue, everything about the business is good, debt is coming down, paying shareholders great dividend yield, everything be pointing at a good direction for the business, meaning the business is evolving, then that would mean the valuations or the fundamentals of the business has improved. So what you are willing to pay for that thing will also increase. The value of the thing has increased. So if that's case of what I'm saying, everything of the business is improving, that just gives you an opportunity to buy it at a higher price, meaning that higher price has become relatively cheaper. I don't know if you guys get what I'm trying to say. When you were a recent graduate, working all your no experience and whatever, what your worth was 2,000 Ghana cedis. So that's what your boss gave you. But when you grew your experiences, you grew your skills, you were no longer worth 2,000 Ghana cedis. So if your boss pays you that amount, he's paying a cheap amount for your experiences, which can be a good thing if you do decide to stay at the company. But if you know your true worth, you are willing to move to another company or ask your boss for a raise, and your boss is willing to pay that if that experiences and skills meets what he needs. So it is when it comes to investing. Investors see the company. If the company has good performances, good fundamentals, and is trading at a cheap price, it's an opportunity to buy it at a cheap price. But if the price moves up and the fundamentals is still performing, that will make that expensive price cheap. You hear me? So that's what I'm saying. An example like this, using EcoBank, it could be that the price and everything is the fundamentals are solid, making this 14 Ghana cedis very cheap. Like in our car example, the 4GT, because of the value of the company. 14 Ghana cedis might look expensive, but it's based on the value of that company, it is cheap. But it also goes the other way as well. We can look at Cowbank, maybe trading at 0.79 Ghana cedis. We might see this as a cheap price in terms of like the amount, 0.79, they are very, very small. But looking at the fundamentals of the business, it could be expensive. Or even if it's not expensive and if it's cheap, we are seeing that the company is not providing much. That is why it's trading at that cheap price. So it's two things. It's either the company is not great fundamentally, so people are willing to sell it at a cheap price, or the 0.79 you might think is cheap, but based on the fundamentals of the company and even the number of shareholders the company has, it could be very expensive. So one thing you should always put in your mind, I think I'm trying to maybe divert a little bit, is the number of shareholders also plays a key role. If a company makes 1 billion and that 1 billion you are sharing it with 1 billion people, you are making 1 cedi. But if a company makes 1 billion and you are sharing it with 1,000 people, everyone makes what? A lot of money. 100 million, 100 million, 100 million. So that's one thing we also have to take into consideration. So I think I've said a lot for today, but hopefully I've made some sense. Let me know what you think about what I've said today. Do you agree with me or not? But probably before I go, I'll just say do not be anchored to the share price of the company. Rather focus on the performance of the company and see, based on the performance, is the share price overvalued or undervalued? Based on that performance or fundamentals of the company, is the share price cheap or expensive? That is what investors' focus should be. Thank you so much. Subscribe, like, share to people you think might be interested. I really appreciate it. Until we meet again, have a wonderful and blessed rest of your day. Peace.